And here he is, all the way from Jersey, Mr. Joel Kraut. Joel, thanks for being on the Generations of Wealth show.
Derek, thanks for having us. I really appreciate the opportunity. We're having some fun off camera, so this should be a blast and looking forward to just sharing with all your people and having a great run at it. So let's have some fun together.
Absolutely. The listening audience, you guys don't know what we do before and after we're done recording, but it's already started off to be a lot of fun. So let's just start at the beginning, though, Joel. Tell us a little bit about you and where you're
Sure.
from and your background, and I know we're going to have all kinds of awesome content after that.
So I started out in Jamaica, Queens, so in the five boroughs in New York. So a little bit different. My kids grew up in suburbia, but I definitely did not. It was a very black and white community. It was very different. And it gave me tremendous eye-opening experiences. I was 10, came home one day from school off the subway. Not a lot of people do that. And there was a sniper up on the roof of the apartment building we lived in. So I was introduced to the real world early. I learned what that was as a 10-year-old. And from there, the adventures just kept going. But all kidding aside, I had a great opportunity when I came out of college. I worked for a company called Eastman Kodak Company, which I think at this point is completely defunct. But through there, I met somebody, met her brother, became a Wall Street trader with him, and we were proprietary traders for 22 years. So I traded across five or six exchanges. We were members in good standing. So I always like to tell people I had a 25-year run with a clean broker-dealer license. So we're proud of that.
Mhm.
And we had about 60 people in the company at the top. We just traded proprietarily. So we had no customers. We just traded our own money for ourselves. And we traded options on stocks, indexes, commodities, anything that moved. And I'm old enough to have been on the floor in October of 87 for the great crash. So, sometimes you're talking to some of your friends or maybe a mentee or someone you just met, and they're all stressed because like the market's down 1.5% today. We were down 25% in one day. So it's all about perspective, right?
Yeah.
You see people that were literally grown adults sitting there crying as they just lost their whole life savings, et cetera. So, those things began to help me understand perspective a lot better. Then, as a real estate investor, I got involved in 96. I had moved to New Jersey from New York. The realtor that sold me my primary residence, she must have had a deal that fell apart and came to me at the last minute to see if I'd buy this condo from her. And I bought the condo for about $74,000 in Freehold, New Jersey, little quiet town. And she helped me do everything. She put the renter in, she got some of the work done. We did crazy, crazy renovation things like we changed a medicine cabinet, put a new toilet in, we painted it. I changed the
Wow.
exterior bulbs, over the front door so you could see where you're walking in. So really simple stuff. But I like to joke with people. By that time I was done, I paid almost 8 grand to get that stuff done. And here I am, like 30 years later, I could still do it for one-third the cost. So when you don't know anything, you don't know anything. And
Mhm.
finding your tribe to get some help from could not only just save you thousands, but also enable you to make thousands. So getting out there and meeting people and networking, I know it's very Facebookish and very Instagram-ish to say your network is your net worth and all those good cliches, but there's a lot of truth to it in our business. So introducing yourself to the world and just letting everybody know what you do and then just be quiet, let it happen. Right. From there, from trading, we really went into real estate full time. And I was one of those cool guys that did everything with no money and then, super leverage up to 123% on the property. And then the crash re-equalized me, for lack of a better term.
Mhm.
And it re-equalized me pretty harsh. I lost about $4.2 million dollars in a very quick period of time on 144 properties that we built up with everybody else's OPM. So we knew how to do those tricks and it took us a while to undo the damage, but we were very fortunate that the markets restabilized and we had the opportunity to rebuild. And to this day, we're still flipping some houses. We own some rental properties. You and I were talking off stage. We just bought one last Friday. So yeah, about 6 days ago, we closed on one. The guys are in there working today and getting that up and ready. We have our first tenant already lined up. So, we go through the process just like all the people listening. We're still doing that because of my age in particular, I feel it's really important to do that. Sometimes you're speaking to a group and there's a lot of young people. And yeah, it's cool to have some of those 1990s and early 2000s stories because they sound like couldn't have happened.
Mhm.
But they're just cute old stories and no one really cares today, right? Because we don't even use some of the same building materials anymore. So you got to be relevant. So we're still doing it today. And as I told you off camera, I have 5 kids. So part of the goal here is to allow dad to have some of the cash flow, actually all of it. And then the kids will get the assets, right? It's not for me.
Yeah.
15, 20 years from now, it'll all turn to them and they can do what they want with it. But I will have felt like I contributed in a positive way to them, just as your sign says, building their generations of wealth. I
Mhm.
feel like, that's crucial and it's very simple, but you just have to do it, right? You really have to just go execute. And I think that's sort of a big disconnect that's out there. People are afraid to do that.
Well, something you just said, and I've said it time and time again, is this business in general is not hard. It's third grade math,
Right.
and anybody that's got a good work ethic and is willing to learn can be very, very successful. The challenge is executing and staying positive because stuff is going to happen. It's going to go bad. It's just the way it is. We're dealing with people. We're dealing with things we can't control, which as entrepreneurs is terrible because we're all control freaks typically. But I my listeners know I too got my ass handed to me in the crash of '07, and fairly similar numbers to yours actually. But in the end, that's what made us stronger because we didn't quit, and we then learn. We learn from our mistakes, and we do it different, and we do it better. And I do enjoy interviewing people that have been in this business long enough to go through one or two or three different cycle changes because those listening that got started in the last few years, uh, especially if they got started around COVID time and just saw up markets, now there's some panic. And to me, I'm not panicking. I think it's Christmas time. So what do you think?
People have told me for the last 2 years I'm out of my mind. A lot of times on panels, people look back like, are you nuts? Because I have said what you just said often. It's about perspective. If you don't have a lot of legacy problems right now and the markets are shifting, isn't that what we kind of all hope for? So that it would bring improperly priced pricing back into the business instead of everything just being a straight up run. That's not really investing. That's buying something and hope it goes higher. That's not really what we're all trying slash taught and trying to really do. I mean,
That's
everyone can spend money.
that's speculation.
Right. It's an art to invest. But again, too many people at 4% were spending a fortune and never even thinking about their cash on cash returns and the money they had in the deal. And now, to your point, things have gone and done something slightly different in a lot of markets. They're out of cash flow. Something breaks. They are below underwater with a 4% mortgage. That's almost like that's just a tragedy. That's insane, right? And then you have other people making good money, not crushing it. I'm not trying to mislead
Yeah.
anybody, but doing solid deals at 6% to 7%. Like, what is the difference? Well, somebody learned how to really invest, enter right, all the things you're taught, understand what's really involved, don't undercut the budgets, thinking you could do it cheaper. Like COVID taught me again, right? I thought I'd already learned that lesson, got stuck with one situation. You couldn't get the materials for 8 months. 8 months. You didn't do anything wrong, but now
Yeah.
you got a problem in your deal. So, really planning and being honest with yourself and not telling yourself, oh, I'm going to do it faster. I can do it cheaper than everybody else. Derek, you don't know what you're talking about. I can sell it higher. Like those days are gone. And to your point, to people who started in that, say, 24-month window, as a Wall Street trader for many decades, you learn that whenever whoever they is, I've never truly been able to define who they is, but when they want to distribute and get out of their inventory, whatever it is in life, they are going to make the market look really good so lay people can take down that inventory for them and take it from strong hands to weaker hands. They're going to feel good for about 6, 8 months, and then it's going to slow down and panic will start the other way. And eventually, the strong hands will begin to come back in and re-equalize their portfolios and start to rebuild. And you're hearing rumors of some of the big companies going back out there in the single family market now. So you're starting to see and hear about that. But it's a cycle. if you've invested smartly, wisely, and understand your cash flows, you're going to be able to handle the cycles. That's the big problem that I didn't do well back in, let's say, the third quarter of seven to about '09, when it
Mhm.
just seemed to be like every day was an unbelievable snow blizzard just beating the hell out of me. It just didn't seem what I didn't even have enough money to evict people who wouldn't pay me. But
Mhm.
understanding that better this time around and not having those problems on my shoulders enables us to evaluate really good deals quickly, smartly, and quickly put the ones aside that we don't want to do and focus on those two or three and try to get our offers accepted. I wasn't smart enough to do that back then, truthfully. I just wanted to do everything
Yeah.
quick, fast. Just you could make money, but we were making money for 90 days and getting creamed after that. So it was a good life lesson, that's for sure.
It is, and the part about it now where um, I never paid attention to other markets back then. So 2004, 5, 6, 7, it was just real estate, real estate, real estate. Well, I don't need to be an expert in the stock market or commodities or any other market, but I should keep an eye on it because there's going to be you see gold and silver going up, consumer confidence means it's going down, right?
Right.
They're going into commodities for a reason. That's going to affect our business. And I don't think a lot of real estate investors get told that enough to kind of watch what the overall economy is doing. And I'll preface this, Joel, with I don't watch the local news or the national news because it's depressing, but I'll watch financial news and I don't have to agree with what the pundits are saying, but I want to know what's this doing to consumer confidence because that's going to affect our real estate markets.
Yeah, I definitely agree with that. Having been a trader for a long time, I was a trader, not an investor. So, to your point, we're watching things in very quick patterns and trying to recognize trends early. And that's really the only advantage we had as a trader, right? You're trying to jump on a trend early and recognize it and ride it. Well, similarly to what you just said, it's very similar to that in the real estate markets, but there are some interrelationships between these markets, and you need to be conscious and aware of it. You don't have to your point, you don't necessarily have to become an expert. I'm not saying you need to go to the Harvard School of Economics and become a great forecaster, but you should be aware that certain interrelationships exist, and gold and silver and other commodities continually rise. Everyone's going to get nervous. Costs are going up for them. Okay, consumer confidence is going to go down. How will that affect us in the real estate world? There's a direct correlation, right? As long as you understand that and you understand how the cycle works and timing of it, you can better prepare yourself for success. And that's part of what your job is.
Right. And I actually was at a RIA meeting this week that I was leading the discussion on, and we were kind of talking about people saying, well, it's hard to find deals. And I said, the deal of a lifetime comes around about once a week if you know what to look for. And then once you recognize it, you act on it. So the question, Joel, is, how do you evaluate opportunities and then decide if it is a deal worth pursuing in today's market?
Well, look, I've been telling people for a long time, I think one of the biggest mistakes real estate investors make is they focus on real estate. Success is not about real estate. It's about finding problems. And every person you're going to meet, we always start out like you want to ask a question, everybody's going to say yes to, nod their heads, lean into. Has anybody ever had a problem in life? The hands go up. Has anybody ever solved a problem in life? Well, there's always a couple comedians that put their hands down, but for the most part, we've all survived, so we've solved some problems. That is what you need to attack the real estate markets with. Go find where there are issues to be dealt with, and that's where you have your opportunities for success. I mean, there are times when you can just shop vanilla off the MLS. We're not there in the cycle yet. That doesn't mean you can't find good properties on the MLS, but it means they're not all good properties yet on the MLS. We've been through one or two cycles where the whole MLS was a very good shopping supermarket, and you could just walk up and down the aisles and pick them. Not quite yet, but there are some markets where it's more beneficial right now than it was through 2.5 years ago. But for me, if I can find some distress or a reason why somebody really needs or slash wants to sell, then there's something to discuss. I also believe you're leading a REIA group. If you ask the question, a lot of the responses are going to be from real estate investor type mentality responses, not from humans. I talked about this with somebody today in Central Florida, one of our borrowers, who was asking me about some help on some seller financing. And I said, look, You got to put your real estate investor hat away. Derek, how much do you need a month from the property? And then shut up. In your head, you're thinking, okay, the 5 year today is about 3.8. I got to double that because I wouldn't do it for less than the risk-free rate times two. Right? No human thinks that way.
Right.
They know, Derek knows, him and his wife, or if you're married, I'm sorry if I just assumed, but you need what, 28.50 a month?
Mhm.
And if you got 28.50 a month, that could work for you. So now let's back into where that's 0% for me, figure out what that end number is because I'm paying down principal faster than I ever imagined, right? Then I want to work out how long I'll pay it for you. I want to show you how big that number is and that you're going to avoid capital gains up front. Like you got to start to think like humans want to think. And I see so many investors blow themselves up that way. Oh, I never can get anybody to finance a property for me. Yeah, because you blew it up yourself. You didn't even give them a chance.
That's
I'm not
right.
saying it's always going to work, but man, shut up and give yourself a chance.
So by the time this show releases in a couple weeks after we record it, this deal will be closed. But I'm closing on one Friday, which is 2 days from now, and the seller is going to foreclosure auction next week Tuesday. So he has had multiple people that made him offers, all lowball offers, trying to take advantage because he has a lot of equity in the property,
Right.
and it's two houses on 5 acres. And he owes about $100,000 on it total.
Wow.
He's $20,000 in arrears, and he wants 350. So everybody else has made him low offers. I went in there and said, okay, what do you want and how do you want it? He said, well, number one, we got to stop the foreclosure. Great. I'll bring the 20 grand to stop the foreclosure and reinstate your loan. That's problem number one. Both houses still need some improvements to them. So we need $150,000 to improve the properties. Okay, great. What's the after repair value? If we subdivide the 5 acres and sell each house with 2 to 3 acres, it after repair value is minimum 800 grand. Cool. So I said, I will bring the 150,000 we need, and I'll bring, that will fix up the properties, reinstate your loan. I'll take over all the payments and all the holding costs, and I will buy it from you for 350. You're going to carry back seller financing until I sell them. And then, so he's getting an interest rate on his carryback, but to sweeten the deal, because he really wants to stay involved, which I don't recommend,
Yeah.
doing JVs with civilians, but I have total control. I have total ownership. But I said, I want to make the first X number of net profit. Anything over and above that, I'll split with you 50-50. So I only have to come up with about $170,000 instead of 350 plus the rehab costs, plus the carrying expense. I'm going to make less money at the end, but I got to bring less money. My ROI is significantly higher. And it was all because I asked him questions and let him talk, just like you said, Joel.
Yeah, I think one, I love it. Two, just calming yourself down and giving somebody the opportunity to really tell you what they need, right? And then try to figure out what they need versus what they want. And let's get closer to what they need, not what they want. We had somebody similarly in Alabama, like the sheriff's going to show up here in 12 hours, lady. I know you have equity. We're not trying to kill you, but we need to reach some reasonable agreement here. We got to go to a bank. It's going to close in 4 hours. You're literally going to get padlocked out of here and with nothing. So again, being able to talk with people, staying calm and rational and soothing is important. You can't get all hyped up in these deals and freak the other side out as well, right? A lot of it is psychology, not to hurt anybody, but just how would you want to be interacted with and treated if you were the civilian and not, two real estate investors in a room in a RIA trying to kill each other over a deal, right? It just changes everything. It changes the dynamic of everything you're doing. And people are shocked because it's actually simple, not harder, right? You don't need $35,000 to pay for that course to figure that out.
No, and even this seller, he told me, he said, your offer blew everybody else's offer out of the water. I mean, he's projected to net, he's getting, the 350 minus his underlying debt, plus participating in the profits at the end, plus getting an interest rate. He's probably going to put about 425 in his pocket when it's all said and done.
Fantastic.
minus his underlying debt of 100 grand. So he's going to put 325 in his pocket instead of 250. That's a win-win for everybody.
Right. You're taking a guy who's fighting off people who want to lowball him. You're giving him a great winning hand from a guy with a proven track record of being able to execute what he said he was going to do. I don't want to say it's a no-brainer for the customer. It's close to it though, right? I mean, things can go wrong. We've all had things go wrong, but you're giving him something that he can count on, and
Mhm.
now he's going to end up with more. I mean, that's amazing. I mean, that's great thinking on your part, and helping other people see that and understand it and then walk backwards through it has to open some eyes in the audience just to start thinking differently than they've been taught to already.
Well, and the other avenue here is we're reinstating his loan, taking that sub two, making on-time payments. So granted, we're not going to have that long term. It's not going to fix his credit
Right.
significantly, but it's going to improve his credit over the next 6, 8 months until that project's done and gone. And we stop the foreclosure. Like you don't have to go in and take advantage of somebody's bad situation to make money in this business.
I think you have to really understand, spend some time to understand the situation and then think about solutions, right? Because it's, to your point, it's all about presenting reasonably win-win scenarios, right? No one's ever going to win 100%
Right.
and walk away happy. That's just not real. You could do that probably once and no one will ever do it with you again. But somewhere around the 80% each mark is a business model that's repeatable. And I think people need to understand that, begin to think that way and execute that way. Too many people have gone to the same schools I've gone to in America. They teach you, work hard, get more jobs if you want to make more money, work more hours. They don't really teach you how to think.
Yeah.
I spent a whole, high school, college career preparing for the next test. It wasn't preparing and learning how to think in a dynamic environment. It was very static. Okay, it's Wednesday's the next test. Next Tuesday's the next test. And we got good at it, but I've been waiting for that same damn multiple choice test to show up since I graduated Penn State. And I can't tell you what year because it was way long ago. But it's been decades, and that multiple choice test, which I still think I could get a 90 on if someone was willing to give me it. I just can't find it anywhere in life. Those
Mhm.
problems, those situations, they're dynamic, they're moving, they're changing all the time. And you need to begin to understand and learn how to think so you can deal with that. And once you do that, it doesn't matter what grade you attained in school. It doesn't matter if you graduated. We have people who are worth tens of millions of dollars who don't even have a GED.
Mhm.
So, the title company doesn't care. They don't ask if you went to Harvard. They just want to know that the dead presidents got to the table. And where they came from, they don't even care about as long as it's not illegal.
Yeah.
So, you have to begin to learn how to think. That's crucial to success. And I don't even think it has anything to do solely in the real estate world. That's with all walks of life. Now, everyone we meet who's successful in whatever they're doing is someone who really can think and understand quickly how to make decisions, optimizing those decisions to the right selection, everything right down to who your mate is in life, right? Because it's all going to have tremendous impact on your success.
Well, my regular listeners have heard this before, but I have a PhD and a good work ethic, a public high school diploma and a good work ethic.
Yeah, I'm going to
And
use that. I like that. I'm going to use that.
and I stole that from somebody else, so feel free. But you can't use it because you have more than a PhD. But
Sounds good though. I like
it
it.
does. But the reality of that is if you're passionate about what you do and you're doing it with the right morals and ethics and for the right reason, there's nothing that you can't accomplish. Even if you're working with somebody and you don't know the solutions, just be upfront with them and say, Joel, I don't know how to do this, but I have a colleague that does, or I know a guy, or let me get the answers and circle back. Don't get caught in some BS and lie to them. But I solved many people's problems that earlier on in my career, I didn't know how to do it, but I knew people that did. So get the data, get the information, circle back. Okay, here's how we can now help you.
I also think in today's world, I'm just holding up my phone for a second. For $99 a month, you can now go to Harvard,
Hmm.
right? All the same info that everybody else has access to, you have access to. And I travel around the country a lot, and I imagine you do.
Yeah.
So I'm in a lot of different environments. and everyone has one. So a lot of the excuse that used to be there 20 years ago, and it wasn't an excuse 20 years ago, it was a legit reason. But that's been stripped away. I mean, look, you can sit there for hours a day and just scroll through your phone, or you can start to learn things that are going to change your life. It's right there for the same $99. And if you're not starting to tap into that, you're making a huge mistake. Regardless of your age, it's going to catch up to you. No one can, just hope today lasts forever. It just doesn't work. Things evolve too quickly for the smartest person versus the person who has no formal training. But having that information and being able to learn things on your own and being willing to go there and do that, I mean, that's going to change your life.
Well, I struggle with change, especially when it comes to IT type of stuff. I'm not that guy, right? Like I bought my first two properties out of the newspaper. And and I'm sure that you remember
Yeah,
searching the
I've done that.
classifieds, right?
Yes,
Um,
that's
but
funny. I haven't said that in a while.
yeah, but now, I mean, you can go into your favorite AI tool and pull comps, or
Yeah,
you can do so many things that I know if I myself and my team don't stay up to date on that, we're gonna fall by the wayside. So I did this as an example in front of a room, probably 4 or 5 months ago, and I opened up Chat GTP and I said, okay, based off of what you know about Derek Dombeck and Generations of Wealth and my company, I Buy Houses Wisconsin, um, how do I structure a deal? And then I just gave it some parameters, right?
right.
Like person was behind on their payments, they're going in, they're in default, blah, 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 blah. And the key was I said, based on what you know about Derek Dombeck, it went out and searched all of these podcasts that I've done and searched all the different things. It actually came back with a deal structure that was pretty damn spot on to what I would offer. And the people in the room were like, damn, like that's, you don't have, you said Harvard is in your phone,
Right.
right? Now, that's not saying I would do exactly what AI told me to do, but we have those tools.
But for a lot of people, they would have never thought of some of those avenues. So
Hmm.
it's a very good starting point to make you think and then really think about what's going on and then figure out how to apply it at different appropriate times. Right. It doesn't work perfectly all the time. Nothing does, not even Chat GPT. But if you start to train, which I've learned over the last 6 months with a couple of people in the office who are really skilled at it, if you start to train it, like you said, to how you think, how you talk, how you interact, it's unbelievable what you can do. I mean, things that used to take me months to put together in writing,
Hmm.
even something simple like an ebook, now you can have that done in 5 days to a person that's going to do final edit graphics can run with it and they can do their part a lot quicker than they ever could before as well. So
Yeah,
you're not going to use those tools. Those tools are going to lead you, and that's not a good place to be. I mean, I know everyone's a little nervous, except for the people who are great at it. But if you're not spending some time learning about it, you're making a huge mistake. And you know, I just feel like it's there. It's not going to go away. No matter how much I'd love to see it go away, it's not. So I can either get
yeah,
on board and start to learn, get a little better all the time, or I'm going nowhere except out of balance.
that's for sure. So you and I chatted a little bit earlier. I know you're buying and selling for your own portfolio in multiple markets, not just where you live. I believe you're doing some lending in multiple markets. What led you to want to go outside of your home base? And how do you analyze risk when you're going into other markets or even markets you're familiar with that aren't in your backyard?
So for us, we have sort of a unique edge. I can see where investors are participating, playing, whatever you want to call it, all over the country. And that enables me to see what's happening in deal flow, price points that are good versus too expensive for that market. And I can see that Derek is only doing two, three deals a year, but he seems to be really good at it. He communicates well, he's very organized, he's a professional guy. Voicemail box is never full when I need to reach him. I get back in 4 hours. It's usually somewhere in 2 to 6 hours, not 3 days. Like, when I reach out to him and ask him a simple question, Derek, how come you only do two to three deals a year? You seem really good at this. Well, Joel, I don't really like to get too far above my own skis, and I don't want to get strapped financially. I said, oh, okay. Well, if money wasn't an issue and you had access to more deals, would you be interested if somebody brought all the money and we could partner in? We have some resources that we could bring to the table from experience and, depending on what market it in, maybe we can buy materials cheaper than you, but you get sort of one of two responses. Well, I really don't want to have any partners. Okay, we're not going to ever force somebody. That doesn't work. No good partnership came of a forced situation. But somebody may say, well, would you really do that? If they ask you that question, generally speaking, you're going to move forward,
Mhm.
right? And now you're in a 50-50 deal. So you talked about math earlier. When I was in school, I was taught to put my head down and go make 100 cents of every dollar. Well, that was moronic.
Mhm.
Truthfully, looking back, that was a 20-year path to nowhere. I could have been thinking differently and learning because look, 100 times zero is still zero. It doesn't matter how much you dislike math. And 50 times two is still 100. Everyone can do that, even if you hate math, right? So if
Mhm.
I have half of two deals and Derek's running them and he's really good and I'm getting 50 cents on the dollar and my net return is probably close to 100% on the money that I put up, I probably should do that. And if it works for Derek and he's going from doing two, three deals a year to maybe now six, well, that's like him adding one and a half to his pocket with no financial responsibility to the deal. So, oh my God, even if we go over budget, I don't have to kick in. That's correct, right? We go over budget 8,000, 12,000. That's coming out of my pocket, not yours. Now, at the end, if it alters our P&L, of course, we're sharing that.
Yeah.
But you don't have that stress on Friday when the contractor's looking to get paid cash that I've already wired to you. So
Mhm.
it becomes a good partnership. In some markets, we've been able to buy materials from our bigger clients, their suppliers, infinitely cheaper than you could as someone who does two deals a year. So that's been helpful. We've been able to help with legal. We just did something in Alabama. It took us a month to clean up title, to perfect title correctly. We actually had to find somebody. We found them, blah, blah, blah. But, our experience was helpful in that regard. Instead of somebody buying dirty title and then they go to try to flip it and they can't,
Yeah.
right? Because not everybody wants to use your title company who took the insurance risk, and now it limits their exit. So having some of those experiences to bring to the table from our side, plus your experience in your market, your knowledge, your team, that's a good combination. That's what we do a lot of. And we're doing that in 5 places now around the country. We would add more
Mhm.
reasonably, but again, a lot of it is from the trust and the people we know. It has nothing to do with the real estate itself.
Well, and the thing that I think is so crucial there, you were still kind of going back to analyzing the person, right? Like you had mentioned,
Yes.
do they return calls and messages? Is their voicemail full? All those things. Nobody talks about that, and it's so simple. And like I've been told many, many times, never pay your contractors until the work is done and all this. And as a general rule, yes, have contracts, everything locked in. I have one contractor though, one window manufacturer, small family operation. I don't even know how many hundreds of homes they have built windows for. And without fail, they will put me first. They will give me wholesale pricing and I will pay them 100% of the bid the day they give it to me. And even during COVID, I called him up. His name is Scott, and I had a 5,000 square foot building and needed a ton of windows. And he's like, Derek, glass is out 12 weeks. I cannot get glass for 12 weeks. I said, Scott, I can't wait 12 weeks. This holds up the entire project. He came, he measured everything, gave me the quote. I stroked him a check. 2.5 weeks later, I had windows installed. I have no clue how he got the glass.
Doesn't matter.
It doesn't matter. So relationships and all of those things and judging people and now you and I were both raised in a time frame where you shook a man's hand, you took their word for it, and I'm still that way. That doesn't mean you don't document it. That doesn't mean you don't
Right.
protect yourself.
Right.
But if you give somebody your word, you follow through, and vice versa. And when you get those relationships, you can move mountains, and that's the business.
A business friend of mine who I've become friendly with over the last few years, he talks about this a lot, speaking around the country, relationship capital. That's like Dan's hallmark. And he's right. Look, we're betting on the jockey. It's real estate. I've done a lot of real estate transactions and built a lot of houses and flipped a lot of houses. I can come to your site and fix it, but I don't want to do that.
Mm,
I want you to get it right. I want you to be doing a job that makes sense for your level of experience. I want you to do budgets that make sense for your level of experience. And I will tell you that up front. Like, it doesn't make sense at this point of your career to buy a house for 100, put in 200 and tell me you're going to sell it for 500. Like, you're not there yet.
yeah.
Now, you bring me a super seasoned person with a great website and they've done hundreds of jobs and they're your partner on the deal, that's different. But if you're doing this by yourself and you've never done over a $45,000 renovation job, we're not really ready to, add a level, extend a foundation, drop in 200 grand and hope for a huge home run. Like, I
Hmm.
know you want that, but you got to do a few first, like have a measured pace to get there. We usually put up a picture of a house burning down because I had two burn down on me.
Hmm.
And if you're not really prepared for all these things and you don't have any tool bag to draw from for experience, you're going to absolutely have a meltdown. And I just can't have you have a meltdown out there with our money.
Yeah.
And things are going to go wrong. Things go over budget. Things take longer to sell. Those are all parts of the process we can work with together. But I let you run free and now you just ran yourself over. That's on me too. And I don't want to do that. So,
Right.
it's
Yep.
it's about the jockeys. It's less about the real estate.
100%. And there's so many factors that come into play. Everybody, and we mentioned earlier, different market cycles. Um, it's been hard to find contractors that are good because the good ones can name their own price and they're
Right.
busy. So, most of the time people are like, well, I can't find deals because I can't find the contractors at a reasonable price that do quality work. And these are all correct statements. However, that you know, I know a guy that knows a guy, capital is important in those situations, right? Pulling favors, asking somebody for, like I have a guy right now that's running a project for me. We couldn't find a drywall finisher, and it's a very small amount of work that we needed. So that, everybody else is like, I don't want to show up there for an hour to get the walls
Right.
wet.
Exactly.
I gotta be somewhere else.
Right.
He said, you know what? My friend is going to come up on the weekend. He lives 3 hours away. He'll do this work for us. And he
We
did. It was friend of a friend.
we had one of our contractors drive about an hour and 20 minutes from where we normally would work with him in Florida. And him
Hmm.
and two guys lived in the house Monday through Thursday night. We stocked the refrigerator for them, and they knocked out the job in 6 weeks. So again, relationship capital can never be understated because we don't know who the right contractor would have been there. It would have taken 3 months or more, hopefully, to get done in a reasonable, professional manner. And these guys blew it out in 6 weeks with guys you 100% trust. You don't mind sending the pizza. You know the pizza box is going in the dumpster. It's not getting smashed in the middle of the living room floor on top of the new hardwood.
Hmm.
People you can work with, you have a relationship with. You put some Gatorades in the refrigerator, you send them, pizzas and things like that. It's a two-way street. You can't just take. You got to give
Yeah.
some too. People need to understand that. It's not always about the last single dollar you make to ensure that you can always make dollars.
Well, and people will step over a dime or step over a dollar to pick up a dime. And they're
Right.
saying, well, yeah, I can get this contractor cheaper, but he's 6 weeks out. Well, what about your holding costs? And forget about the holding costs. What about the opportunity costs? The sooner you turn that money and you churn it into the next deal, whether you're refinancing and keeping it or whether you're flipping it or whatever, that capital could be out working and making new money again. So I don't know. That one actually gets me pretty fired up, Joel. Just do it all the time.
I would imagine for yourself, similar for us and others out there, your private lenders that you're going to use, because everybody wants to use private money lenders, not hard money lenders like us.
Hmm.
You don't want that lender to drive by that property sitting dormant, right? That doesn't taste good to them. They don't understand that you might be waiting for permit inspections or whatever. To them, there should always be people working. So you want to keep the jobs moving.
Hmm.
That's important. You're not really thinking about that up front because, hey, I'm paying that person 10, 11, 9, 12, whatever the number is. And they're getting their return, so they should be happy. That's your train of thought, but that's not the whole cycle of how this works. We, although it may sound corny, we send videos probably every other Friday. We used to do it every Friday, but it became too hard, to be perfectly honest,
Yep.
of what's going on inside the house, or if we just put a new roof on. It's amazing. Rich people, like they see a new countertop go in and they're all pumped up because what you're not realizing, or not you, but a lot of people aren't thinking, hey, that's my money going to that countertop. They said they were going to use the money that way, and they're showing me that they are. Thus, I'm building more trust with my lender. Right? They're not thinking that way. They're just thinking about the monthly payment getting there on time. Well,
Hmm.
there are other opportunities to build that trust and cement the relationship so that as you're finishing, they've already called to ask you where they can put their money next. Right? That's how you're building a business, not one-off things. And the sooner people younger in their career at the game understand that this is a business and treat it that way and think about those relationships, the more successful they're going to be short, medium, and long term. That's crucial.
Well, when I was a hard money lender for 10 years, it drove me crazy when people would ghost us or not communicate. Like your lender is your partner. That's the way you need to look at them. And as you said, I do this in my own transactions with my own private investors today. Communicate, communicate, communicate. Let them know what's going on. Hey, you know what? If we're going to have a challenge, I'd rather they hear it from me with a solution on how we're going to solve that challenge than they have to hunt me down and find out why didn't this happen? Why are we not on market yet? Why is it not selling? All the questions, right? Let's
Absolutely.
let's go there. And the second part of that is always have a plan B or a plan C at the beginning when you buy the property. Okay, if it doesn't sell, what am I going to do next?
Yeah, I think too many people go into these projects with, I'm going to do this, and it's very, very finite and static. And they don't, to your point, have plan B and C ready to roll. And it should be fluid. They should be prepared for it. And you're going to need to have that laid out before you have your offer accepted or right then, not 10 weeks into the job hoping it will work out. We see too many people trapped in their own deals
Mhm.
and have no out. And that's what the markets in some places only moving 5, 7%. You can imagine if they move 15, right? Which is not impossible to think of. So again, going in and understanding, do I have multiple exit strategies? Because if not, you should pass on the deal.
Yeah.
It's not going to end well. And now, unfortunately, some people are learning that. So it's not just me being an old guy. Oh, that's not going to happen again. It can never happen, blah, blah, blah. The usual things you hear. As soon as you guys all in one room start telling me it could never happen, if I can get enough of you to say that, I'm almost guaranteed it's going to happen. So that's my trader mentality hat coming back on. And we want to stay away from the herd thought, right? The herd
Yeah.
thought can kill me after a while. So I don't want to run against the wind all the time, but I want to pay attention earlier on, as you were saying, the interrelationships between markets. I want to pay attention to where the wind's blowing all the time and be aware of it and how that might affect me. What's it look like 3 months? I don't have enough information to know what it'll look like in 6 months. Thus, I need to stick to jobs where my renovation is going to take 4 to 6 weeks max, right? I don't want to take that risk and expose myself. I know it's cool to make 100 grand on a flip. But if you have to spend $1 million to make the 100, and I can spend 170 to make 35, like who's better? Like whose risk was better mitigated? Could I sleep at night? Was I afraid of the job? Because that 100 grand at that level, that's a 10% move to get to zero with costs and carry and what? It's probably a 6, 7% move, and you're wiped out. At 35,000 on 170, 20%, that's a hell of a nice play.
Yeah.
Right? You really make 20% of the gross selling price, you've done very well in any flip. People don't really understand that. They watch Instagram and some of the guys are super slick and they have great marketing. I understand that. But most of them are actors and actresses. You watch HGTV, they're renting houses from the Derricks of the world. That's
Yeah.
not really their house. Nobody renovated a house in 45 minutes with commercial breaks. Like that's not real. So, and you're doing this a long time. No one has ever showed up on your site in a Lamborghini with $2,000 tires, have they?
No, I interviewed David Seymour. His show was released a few months ago when he had Flipping Boston TV show,
Right.
and that was a fun interview. You all should go back and listen to that. But he said when he got that contract to start that show, him and his partner weren't partners. He had no clue what he was doing, but he figured it out. That was a really fun interview, to be honest with you. But I got we're going to keep talking and talking forever on this, Joel, but we've got to kind of start winding up.
No problem.
What's one question I should have asked you that I didn't? And it can be about anything.
I mean, to me, like, being out there in relationship capital and what really happens when you finally get honest with yourself. I mean, for me, the journey changed dramatically between 12 and 14 as I finally stopped all the shortcuts and BS and nonsense and noise and put all the tricks away and, really went back to basics. And the basics worked. I have three best friends in life. They were the ones that didn't quit on me, when we went from 100 best friends down to three in probably 2009 when I couldn't buy everybody dinner anymore.
Mhm.
And, you know, one in particular would just literally just put his foot on my neck and keep it there and not accept any nonsense or any BS. And, he saved me. I've thanked him numerous times, and to this day, he's still a great friend and sometimes mentor. And we'll just sit and talk about life and reflect on things. And too many people are caught up in this money thing. And I'm guilty too, believe me. Look, I needed to make tons of money to pay back debts, to pay people, to cover my own living expenses and take care of my kids, etc. So I don't want to sound super Pollyannish, I'm not Shaquille. But building a life you love, just like it says right behind you on the sign, instead of one you survive, is what people should be thinking about. Finding their passions, following it, doesn't matter what people tell you. One of my daughters in particular was told, you'll never make enough money at this, you won't do this, you won't do that. She ended up working at Yale, Northwestern, and has a very nice career, making a couple of times what people had told her, including family members, what she could possibly make because she became great at something. Those people are all talking about what they can make doing something they hate. It's very different, right? As you know, when you meet people that are all in, not because they're desperate, but because they love what they're doing, their financial remuneration, their financial impact that they're having on others, it all changes dramatically. Again, you can be proud of what you're doing. You can feel good about it. You can feel good about yourself. You're having a positive impact in your community and you're building a life you love. And when you're sitting around on a weekend, or if you're blessed enough to have enough during the day, one of my friends went for a walk at 1:30 in the afternoon in the woods with his wife on a Tuesday. And I thought, wow, that is cool because that's real wealth, right? Not waiting for the next phone call to get another $1,000 check. So you're figuring out what bill that's going to, doing simple things to put those pieces in place so you can have more flexibility and end up, I can say this to you because we both went to high school. You told me you went to high school. And I'm sure, just like you, there was a really cool person in high school, but that person kind of rotated every month, whoever was the coolest. But if you take 90 and you subtract 30 from it, and that's 60, and you think of that as the rest of your life, and you're in control of how you live it on a daily basis, you are now the coolest person in the room for 60 years. And isn't that what we really all want? I mean, at the end, because nobody ever went to sleep dreaming to be average, right? Nobody dreamt about being a C-minus student, making 22 grand a year, and having a 14-year-old car that has dents and scratches and bruises, right? We're in the south of France. We're in the Bang& Range Rover. Our partner is very attractive. We're at the craps table. It doesn't matter. We're going out to an unbelievable event. Then we're going skiing. Whatever it is that you love or fantasize about, like that's what our dreams are. And our goals need to be tied to it. We have to have plans to execute. And that part's the boring part, but that's what the rich and wealthy are really doing. And they don't hide it from any of us. We just need to follow. Sorry.
No, that was perfect. That was absolutely perfect. Well, we are going to wind this up, and then after we're done recording, then you and I are just going to keep talking because we could do this for hours. But
Yes.
first and foremost, Joel, thank you so much. Is there a way that people can find you, reach
Sure.
out to you?
The easiest place is right on our website. You can see the acronym behind me, but it's B with four R's.com. We are Burr.com around the country. That's the easiest. We don't use chatbots, we use people. So if you do leave a message, it might be really me responding or calling you back. Uh, I don't like that other way. So that's
Mhm.
important to us. That's the simplest, easiest place to find us.
Perfect. Well, thank you for all of your knowledge and your words of wisdom. And for everyone else that is a regular listener, Generations of Wealth is not just about financial wealth. It's time wealth, health wealth, social wealth, everything, physical. It's living your vision and loving your life, the mantra, because of that. And I think Joel is a great reminder of what that should look like. So thank you, Joel.
Thank you. I'm a big believer. I think what you're doing, and not just with an acronym or a couple of words, but really bringing that to people, it's crucial. And people need people like yourself that are doing that. It really helps them.
Awesome. Everybody else, thanks for being here. I say it after every show. Please do what you can to help spread the message. Get this show out to all of your friends and family or anybody you think that this can help. And, jump on socials, plug everything you can. And until the next one, go out, live your vision, love your life. See ya.
Thank you.
Welcome to the Generations of Wealth podcast. I am your host, Derek Dombeck. And you know what? Today's guest, sometimes you just get guests that you connect with really quickly. And I will say that is Joel Kraut. I think we're cut from very, very, very similar cloth, and pretty long episode, as you can probably see, but well worth the listen. The knowledge and experience from Joel was fantastic, and it's something I know you're going to get a lot out of. But before that, while recording this episode with Joel, it also reminded me of why we do this, and why we do this as a business, why we do the Generations of Wealth podcast, why we do all of this. And that is to build relationships and have that capital, that relationship capital, right? So you're listening to this show. I am part of your network. I want you to be part of my network. That's building relationship capital. So anything that we can do to help you here at the Generations of Wealth, don't hesitate to ask. If there's something that you need and we can connect the dots, that's what we're here for. So go to derekdombeck.com or thegenerationsofwealth.com, reach out to us, contact us, and let us help you. So with that, I'm really, really excited about bringing on our guests. So let's get started.